In this video, I'm going to be trying to force you to use power of 3 in 2025. All right, ladies and gentlemen, so this is example number 1. So we are going to be utilizing these 3 candles. 1, 2, 3. We are going to be using the previous 2 candles to identify our bias. 1, 2. These 2 candles are going to tell the bias for the third day. So look what happened. This is the first candle. The second candle closed below it. So what is going to be the bias for the third day? It is going to be bearish, right? Because the second candle closed below the low of the first candle. Now, if we mark out the open price of the third day and we drop down to 15 minutes down from here, we have this opening price. Look to the left side of it. Well, always look to the left side of it and identify, short-term lows, highs, equal lows, equal highs. Over here, what do we have? We have a short-term high that was swept. Now, look also here, we have this auto block, right? Very simple stuff. So price pushes up. Now let's use standard deviation to see some more stuff. So let me just remove this. We're using our standard deviation for the last low to the last high before a market struck a shift. And that is before the manipulation move. So the manipulation move typically ends in -2 and -2.5 level, right? So where did price go? Into the -2 and -2.5. Do you see the accuracy over here? Then what we're doing is we're looking for a market structure shift. Right here, we have it. Now, what else do we have here? We have this auto block, continuous bullish candles that sucked liquidity. That is your auto block. This is your short position right here. Stock goes right above the high. What do we have here? Equal lows. 3.69 risk to reward ratio. What else do we have here? Significant low. That is sell side. Major sell side. Giving you 6 risk to reward with one trade. My apologies. 6.03. So, do you see the accuracy? I'm not kidding. What I'm teaching you right now, it can literally change your life. But I know some of you, after watching this video, you're going to watch someone else. You're going to watch someone else's videos. And this is going to be a loophole where you keep watching different videos. You don't learn from one guru. And, never going to be successful. I'm telling you that. Okay? So let's move on to the next example, though. Right. So here is another example. And we're going to be utilizing 3 candles to take our trade. First candle, second candle, and third candle. This is on the daily diaphragm. So we're going to use the previous 2 candles, 1, 2, to identify our bias. Look at it here. We failed to close below this low over here. Right? We closed where? We closed here. Right? So what is going to be our bias for the third day? It is going to be bullish. So we simply mark out what? The opening price of the third day. We're going to drop down to 15-minute time frame. This is the opening price, right? Look to the left of it. What do we have? South side liquidity. Now, this is the manipulation move to the downside. Why does this manipulation? Because our bias is bullish. When I use, if you want to extra confirm it, right? You set the deviation over the last high to the last low. Look at the -4. What is near that -4 level? A liquidity pool level. Where did price go? Into the -4, swooping out this sell side over here. Then, what do we have here? Market structure shit. Right? Then, what do we have here? Kind of would break a block, if you would say. Right? Or there's a fair value gap. This could be your entry. Stock could go over here, no problem. If the stop is big, it doesn't matter, right? And you go for 1 to 2, even though you're going to go break even at around this level. So let's see how this plays out. And it doesn't matter if the TED day is over, right? Because when you are in the trade, you can keep it running, right? You don't have to close your trade if the day ends, right? So in this case, you can see the day ended somewhere around here. But on the 4th day, our TP was hit. So let me give you guys one more example. All right, so this is the last example. And I'm on the weekly time frame this time. We're going to be utilizing the 3 candles to take our trade. First candle, second candle, the third candle. We are going to be trading the third candle. We're going to be using the first 2 to identify our bias. So if you look at it here closely, we failed to close above the first candle high, and we closed somewhere around here. So what is going to be the bias for the TED week? It's going to be bearish. So we simply mark out the open price of the TED week, then we drop down to 1 hour down from. Our bias is bearish, remember that. So this is the open price. Look to the left of it. We have buy side liquidity. To confirm it even further, we use standard deviation from what? The last low to the last high before the market structure shift. So the manipulation move ends in -2 and -2.5. Do you see the precision over here? It is not a joke. Okay? Then what else do we have? We have a market structure shift with displacement. We have this auto block over here, consecutive bullish candles. That is your short position, right? And let's see how this flows out, right? Because I don't know. Let's see. Yeah. A trade this big, you can absolutely catch it. What I'm teaching you right now, I promise you, guys, come on, please stop watching other people. Even if you don't want to watch my future videos, just go and practice this model that I'm teaching you right now. I'm literally sick right now. I have flu. But I want to teach you guys because I want you guys to be successful. All right? Just go and backtest, practice as much as you can. I'll see you guys next week. Take care. Goodbye for now.